So Bitcoin is just a much more powerful idea. It's the digital transformation of capital, right? It's not digital information, it's digital energy.
Bitcoin is up more than 60% so far in 2024 to hit the $68,000 mark for the first time in over 2 years. This upward trend is due to a combination of factors, primarily the increased accessibility and legitimacy provided by ETFs. Bitcoin price movements are notoriously difficult to predict, especially over weeks or months. But momentum looks optimistic through 2024, and there is evidence that Bitcoin's rally is still strong. In today's video, we will tell you about Michael Saylor's view on Bitcoin, as he thinks that Bitcoin is the asset to hold for the next 100 years. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Bitcoin is unique because no amount of capital entering a Bitcoin ETF will create more Bitcoin. What we have is 900 Bitcoins per day. And around April 16th through 18th this year, we will reach 450 Bitcoins per day. It will be the halving, but it will be the largest halving in the history of Bitcoin. It's the equivalent of someone coming into the market and saying you're going to buy $8.5 billion worth of Bitcoin a year for the next 4 years, guaranteed. This is the impact on demand. 8,500 million or $23 million per day at current prices. That's a huge amount. But more importantly, it's a huge gap between supply and demand during the year where demand through ETFs increased by 4 to 10 times daily supply. So what you have is institutional capital comes in and then the supply is cut in half. The approval of ETFs was a fairly concrete endorsement of Bitcoin as an asset class by regulators. And there is no consensus anymore for anyone considering banning Bitcoin or not approving Bitcoin ETFs. So that changed the global consensus that maybe it was too good to be true. Maybe they'll ban it, maybe it's not forbidden. The approval of these ETFs meant that it did not matter who won the 24 elections. He took the future of Bitcoin out of the hands of the president. He took it out of the hands of the next head of the SEC. It removed it from the control of most global regulators. What then happened was that positive momentum was created where there was pressure to approve ETFs elsewhere in Asia. You'll probably see spot ETFs in Hong Kong. You'll probably see them approved in any country where people are hesitant. This also created a pricing conflict. Before, you were paying 2.5% to keep your money in Grayscale, and now all of a sudden you're paying 1.5% in Grayscale. But you're paying 25 basis points in Grayscale, or you pay 20 basis points and even 19 basis points. Not only does this reduce fees for institutional Bitcoin holders in the United States, but it also puts pressure on international fees. Then you saw a domino effect, and people holding European, Canadian, and other spot ETFs in the rest of the world that had fees of 100 basis points or 150 basis points need to reduce their fees because otherwise capital will flow out of their instrument into the instruments. If you own an asset with an infinite duration and plan to invest money in it, then the difference between a 2% fee and a 25 basis point fee is losing 37% of your money. It's like taking a third of your money. So if you are a Bitcoin investor, having low fees means you invest $1 million and keep that $1 million. Having high fees means you invest $1 million and lose $300,000 over a 20-year period. So where will these low rates show up? This will cause the price of the asset to rise. First, because the owners of the asset don't lose 1% or 2% of their money every year, but second, because many will invest $1 million or nothing in it. So if you like it, you'll invest $1 million. If you don't like it, you will not invest anything. Then you start to see money flow from gold to Bitcoin, from real estate to Bitcoin, from the S&P index to Bitcoin. And that's a big problem. The launch of ETFs was a success. This is the ideal type of asset to include in an ETF. It is a global asset. It's the biggest brand. Everyone knows what it is. It is actually the best thermodynamically sound investment. He has the best historical performance. And of course, it doesn't have the full range of risk factors that a company or bond has. It has no credit risk, no business execution risk, no currency devaluation risk, and no physical risk associated with real estate. You will never be struck by lightning. There won't be a tornado. You have no food deficiency. You have no property tax risk. You have no political risk. If you ask yourself the question, you got $1 billion and bought real estate in Africa. Where did you want to invest $1 billion in a building? Which country? Which city? Where? Or you can buy Bitcoin. As you can see, it is something of better quality. What was the main liability of Bitcoin until 2024? It was not the thermodynamic risk factors, nor the technical capabilities. The biggest risk factor of Bitcoin reaching 2024 was a government banning it. But what just happened in January is quite the opposite. Most of the hype around Bitcoin is that it's too good to be true. And because it's too good to be true, the government will hate that you bought it and will take it away. With the approval of these ETFs, it is the government of the most powerful country in the world, the United States, which has become a leader in financial regulation. Whatever the United States does, it will influence Singapore, Australia, New Zealand, the entire EU, Hong Kong, and even China, for that matter, as well as all of South America and all African regulators. So, if you're buying Bitcoin over a 4-year time horizon, this shouldn't matter to you at all. And of course, the appropriate time horizon is 40 years. Maybe it's like the lifespan of your investment. If you plan for 400 years, you will do brilliant things. If you're looking at 40, you'll probably make the right decision. If you think 10 or 20 years ahead, you won't have anxiety. 4 years is the minimum. But people who operate within 4 weeks and 4 months are just going to make terrible decisions. They're the ones who probably panic sold it when it was trading at 39,000 or panic sold it when it was trading at 16,000 or 20,000 12 or 16 months ago. And they probably bought it for the wrong reason. But ultimately what we saw was Bitcoin going public. You can have it as a long-term property. This will spark a lot of positive behavior from other regulators around the world. This will accelerate institutional adoption. This will encourage political supporters of Bitcoin. This will create a marketing conflict between several Wall Street companies. We are seeing this happening now. This will strengthen and empower all OG Bitcoin holders. If the value of Bitcoin increases by a factor of 100 because people buy it as a store of value, its value is 100 times higher. It's not a responsibility. The fact that it is an item that is not valued on a cash flow basis means that it will never miss your quarterly cash flow expectations. This is a reflection of the cash flow that has reached it. Bitcoin is simply a much more powerful idea. This is the digital transformation of capital. It's not digital information, it's digital energy. Energy is matter, energy is capital, and energy is property. Bitcoin is therefore a digital energy. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.